All right, so today I wanted to talk about a company that actually it's a REIT, but I've talked about it once before, maybe twice. IIPR, Innovative Industrial Properties. Let's read a little bit about it and then I'll get into it here. Um, Real estate investment trust, which engages in the acquisition, ownership, and management of industrial properties, specifically ones for growing marijuana. Again, they're in 103 properties, looks like about 20 states roughly. And there's a handful of reasons why I like this company, right? Um, the first reason is it looks cheap right now. The only problem is it hasn't found a bottom at the moment. I mean, it's been going down for quite a while now, basically ever since it was forming an uptrend up until looks like about December of last year, and then it's been going down ever since. I've been buying this. I've been dollar cost averaging this company since it went below about $100. I do have a small position. Uh, if you look at this company, I mean, it hasn't been, as far as price goes, it hasn't been where it's at. It was briefly there in March of 2020, but it hasn't been where it's at since looks like early 2019. So it's been 4 years since the stock price has been where it's at. Um, it's down massively from its all-time high. I mean, it peaked out at what did it peak out at? You look at about 286 in November of 2021. Ever since then, it's down about 75%, which is crazy, right? I mean, to be fair, I think it was definitely expensive there, but I think it's very cheap where it's at right now. And let's get into its exact valuation. Price to FFO of 8.2, which is way below its 5-year average of 30. 30 is definitely expensive. Honestly, I'd probably pay upwards of maybe 20 to 25 is probably fair value for this company, in my opinion. Obviously, everything here, in my opinion. Um, and even with it being down as much as it's down, it's still more than doubled the S&P over the last 5 years, right? Or sorry, since 2016. Since five years, 95% versus 52, so almost doubled, right? Um, and I mean, if you look at the balance sheet, the metrics on this company, it looks very good, right? It still looks very good. Profitability is very, very, very good. I mean, gross margin 96%. I mean, that's just crazy. Um, the growth is very nice, right? I mean, everything is looking very good there. Financial health is still decent. They are issuing shares, which is something I'm a little bit concerned about, but um, that's pretty much one of the only concerns, right? I mean, as far as the dividend goes, this is another reason why people are going to love this company. Again, you never want to buy a company solely because of the dividend, right? You never want to do that because that's a good way to get burned. You want to buy a company because, I mean, you look at the dividend as a cherry on top, right? Essentially, in my opinion, that's the best way of looking about it. Again, FFO payout ratio is high, but again, it's a REIT, meaning it has to be high. Again, current dividend is almost 11%, right? Almost 11%. And they're growing it very nice, like 48% over the last 5 years. That's very, very nice. Are they going to do that over the next 5 years? Very unlikely. But again, if you'd have bought this company, back 5 years ago, you'd have like a 40% yield on cost, which is insane. I don't think that's going to happen. I mean, maybe, you never know. But I think that you're going to have probably 20%, 20 to 30%, and that's utterly insane. Like, why would you not want that, right? Um, so again, I think it looks cheap where it's at, right? I mean, let's look at the financials here. Let's look at the financials briefly. If we look at the FFO, which is the main metric you want to look at as far as REITs go, it's growing very nicely. I mean, look at that. Look at that growth. Just utterly phenomenal. I mean, 2016, 1.7, 5 in 2017, 15.7 2018, 44 in 2019, 110 in 2020, 188, and then 234 last year. So again, the growth is just out of this world with this company, right? Um, the one, I mean, if let's just compare it to the S&P here, I mean, over that time, it's just destroyed it, right? Just utterly destroyed it. And again, that's not even including dividends, right? So the one concern here is I think it is a little bit risky, right? I mean, I think there definitely is some added risk to this because there is a little bit of an unknown as far as these businesses go, but um, it's in an industry that I don't see it getting any smaller anytime soon. I mean, the trend is very clear that we're headed towards marijuana legalization, or at the very least, um, less restrictions, right? Whether it's decriminalization, medical, whatever it is, but there's going to be less restrictions over time, right? Which is just going to help this out. And again, on top of that, if one of their tenants goes out of business or whatever the reason is, they're already set up. They can just have a new tenant hop in there and take over the business, right? So that really helps them out as well. I mean, if you look at what are analysts saying here? Analysts are insanely bullish. I mean, there's not very many that cover it, but again, the average is 136, which is a over 100% return. That's for a year from now. I don't think you're going to get 100%, but it wouldn't surprise me if you get 50%, right? And on top of that, you're getting that crazy high dividend, right? Insiders look like they're buying. So, in my opinion, this is just the perfect gamble. And I don't think it is a super risky bet. I mean, you're not exactly buying some high-flying tech stock here, right? I think that this is just the perfect company to take a chance on because, number one, it's growing very, very nicely, right? Very nicely. It's in an industry that is going to keep growing, and you get that crazy nice dividend, right? So in my opinion, this is just a no-brainer at the current price that it's at. But again, the one concern is the industry. It's not the most stable one. And number two, it is fairly heavily regulated as well. That's another potential issue. And on top of that, again, the borrowing costs, that's probably one of the reasons that's driving it down here. And it hasn't found a bottom yet. I mean, maybe it has. For all we know, it has. But there isn't a clear citing that this has found a bottom, right? I mean, if we look at it, like I said, ever since November of 2020, it has not found a bottom yet. So that's something that I would look for, that once it finds a bottom, then look out, right? Chances are it's probably within the next 6 months, roughly, if I was guessing, but because I don't think it can go that much lower. I mean, FFO yield of just over 12%, again, so they could be paying a 12% dividend, which is just crazy, right? But yeah, like I said, I think that this is just a perfect gamble in my opinion, and I don't think it is that big of a gamble. I'm just kind of putting it that way. Because not everything, but most things look good here. Most things look good. And again, if you're looking at the price of stocks over the long run, they're going to follow the fundamentals, right? They're going to follow the fundamentals. And when it comes to REITs, these are the fundamentals. And if this number keeps going up, which I don't see any reason that it won't, it's only a matter of time until it gets back up to 200, right? 300, right? That's going to happen at some point. And when that happens, you're going to get some crazy nice price returns, and you're going to get a very nice dividend on top of that. And who wouldn't want that? So anyway, that's what I wanted to bring up today. If you liked the video, hit that like and subscribe if you haven't, and stay tuned for more.